Hello ladies and gentlemen, Jay Tyler here. Welcome back to Jack Fund Management. The jobs number showed how wildly off mainstream assumptions can get. Furthermore, with every data point within fingertip distance, it can exhibit cluelessness of this presidential cabinet. Yellen went out of her way to go out of her lane and mentioned rates. A leash got tightened. Please give that red subscribe button a little tickle and or thumbs up this video. Thank you. She head-spinningly soon thereafter retracted. 260 versus 1 million in unemployment number that grew with pay going up screams of wage inflation. Dozens of CEOs lament labor shortages. Uber, as we mentioned, cannot find workers. Numerous economists emphasize supply-side problems. Biden could disincentivize work. We shorted Tesla a while back at around $7.50. Compounding in these names has just reached points not adequately rewarding. In pockets, another Archegos could arise. Tech, in this sense, like a Tesla, traditionally a safer haven, has puked on those uninitiated, verifying itself as not so safe. So like uranium, US energy infrastructure could use some hardening. Otherwise, these events, like a Colonial, could cause more obstacles. A smaller of these materializing as real upward pressure on oil, gasoline price. Colonial could struggle to get product back online, all around commodity pressure persists. Mainland China, barring some coal transports from Australia, now has shortages with cooking coal, even furthering this commodity thesis. Sleep tech keeps rising, those like Lovesac, ticker LOVE, and Purple Innovation, PRPL. Even on this job news, TENS landed at 148 for about a second. It sprang-boarded back up to pre-jobs report levels thereafter, closing high. This cyclical reflation trade reigns solo and supreme. We will see what Cobra-Biden actually does with this spend. So far, it really does not look good. Obama and Bush produced lowest numbers in terms of average GDP per quarter in office. This has large correlation with spending. They both increased federal deficits more than any president post-World War II. Another factor, spending on key education, basic non-military research, and infrastructure appear to drive economic growth more than any other. Biden, of course, talked his book. Wage growth grew a ton. A lot of this money goes to clothes, restaurants, hotels, gambling, home goods. Real estate REITs could materially gain. Cost. One would do well not to assume it comes free. One will pay a hidden tax, or not so hidden, at a pump, on poultry, corn. Not expected to cease here. Inflation likely remains marching higher. Bottlenecks could weigh on some manufacturing, like auto manufacturing, lumber mills. China has a large workforce while U.S. productivity has declined. Policy may have very well overtaken monetary policy. We will see if this report proves an outlier. Likely not. High multiple or no multiple names have fallen out of favor. Investor style has majorly shifted. This substance over story idea persists. Meme names, penny stocks, Chamath SPACs, Teslas, Coinbase, Cultstocks fade. Coinbase, as we said, launched as a liquidity event. Posted $2 billion in revenue above outlook. 41 cents first quarter EPS against 17, sales more than tripled. SeaWorld, ticker SEA, had 2.2 million in attendance in Q1 of this year. Norwegian will start sailing this summer to Europe and Caribbean islands. Roku, ticker ROKU, put out strongest revenue growth since going public, raising ARPU up 32% year over year. This rotation persists. Think lumber. Anyone who keeps crying about Tesla before and or after just sounds like a loghead. Many start to short Dogecoin, a flitting thing, largely administration fueled. Institutions now chase crypto. Services sector has not ramped up. Some workers claim they still feel nervous. Unemployment Uncle Sam, mailed money still looks counterproductive. Peloton got a recall. Litigation could come up from this. With 125,000 tread pluses, logistically what will they do? Quarreling, the CEO put out a mea culpa. How could you sell a lifestyle acting like this? Comps likely get harder going forward. Alternative meat could all get washed out, as all flatten each other through competition. Eating habits likely have gotten way overblown, especially in terms of TAM. A third of jobs in search come from hospitality and service. America published a 2-year card spend finding, credit spend up by 14%. In a couple of decades, healthcare could easily dominate U.S. GDP, and OPEC remains restrictive. U.S. Chamber of Commerce confirmed White House money hamstrings job reports, and they will lobby. Amazon will build out Sidewalk, IoT, with further reach than Wi-Fi, connection to Ring, mailbox security. Prices of agricultural products such as corn keep skyrocketing. Could likely step in, pushing prices up with outsized demand. Airbnb will report this week. We appreciate you all for watching. Join us, join Jack next time.